Ladies and gentlemen, good day and welcome to the Gadgil Q2 and H1 FY26 earnings conference call hosted by Motilal Oswal Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Trivedi from Motilal Oswal Financial Services. Thank you, and over to you, sir.
Yeah, hi. Good afternoon, everyone. On behalf of Motilal Oswal, I'm Naveen Trivedi. Would like to welcome you all to the Gadgil Jewellers 2Q FY26 earnings conference call. From the management today, we have represented by Mr. Saurabh Gadgil, Chairman and Managing Director, Mr. Firodia, Full-Time Director and CFO. And now I would now hand over the call to the management for the opening remarks. Over to you, Saurabh.
Yeah. Thank you, Naveen. Good afternoon, everyone. And thank you for joining us today for the Gadgil Jewellers Q2 FY26 earnings call. I hope all of you had the opportunity to go through our financial results, press releases, and investor presentation, which are also available on the stock exchanges as well as on the company website. This quarter, gold prices continued their upward trajectory, rising over 50% year over year and in high teens on a quarter-over-quarter basis. Despite this sharp increase, consumer sentiments remained highly encouraging. The initial momentum was steady and gained strong traction as the early festive season began, with Navratri providing the perfect finishing touch to end the quarter on a high note. We launched 8 exclusive stores during the quarter, 5 company-owned COCO stores and 3 franchisee-owned COCO outlets, taking a total store count to 63 at the end of Q2. This quarter also marks a significant milestone in our expansion journey, as in line with our communication last quarter, we successfully entered new markets beyond the western region, opening stores in Indore, Madhya Pradesh, and Lucknow and Kanpur in Uttar Pradesh. Our teams carry out extensive research in selecting these locations, and we strongly believe that these new outer Maharashtra markets will play a pivotal role in the growth playbook going forward. For H1 of FY26, our consolidated revenues from operations stood at 3,892 crores. Gross profit came in at 484 crores, up almost 77% year over year, reflecting an improved product mix. EBITDA was 266 crores, registering a growth of 101.3% year over year, while net profit rose to 148.7 crores, higher by 101.6% year over year. The net profit margin expanded to 3.8% compared to 1.9% in H1 FY25. The company delivered an exceptional performance in this quarter, driven by healthy growth across all categories, retail, e-commerce, and franchisee segments. Early festive demand, particularly during Navratri, resulted in record-breaking sales of 428 crores, an exceptional 16% rise year over year. Our Q3 has already started on a very high note, with the Dussehra and Diwali sales setting new records and extending the overall sale for the month of October to over 1,800 crores. We expect this strong trajectory to continue and remain confident for the year ahead. Our pan-India expansion program is progressing well, with around 13 to 15 new stores planned in the second half of the year. Having already entered Uttar Pradesh and Madhya Pradesh, we are now exploring additional opportunities in Bihar as a part of our broader vision to become a pan-India leading brand. We remain on track to achieve a target of 76 to 78 stores by March 2026. With that, I would hand over now to our CFO, Kiran Firodia, who will take us through the financial results in detail. Thank you, and over to you, Kiran.
Thank you, Saurabh, and good afternoon, everyone. I'll now walk you through the performance highlights for Q2 financial year 26. For the quarter, consolidated revenue from operations stood at 2,177.6 crore. Gross profit rose by almost 91% year over year to 258.1 crore, with the gross margin expanding by 510 basis points to 11.9. EBITDA grew by almost 117% to 142.9 crore, reflecting an EBITDA margin improvement of 327 basis points to 6.6%. Net profit also surged by 127% year-over-year to 79.3 crore, with the net profit margin rising by 190 basis points to 3.6%. A retail segment, which accounts for around 72.2% of total sales, continues to be our largest growth engine with a revenue growth of 29% year-over-year, with an EBITDA margin of 9.1% and PAT margin of 5.1%. Beyond retail, both e-commerce and franchise segment delivered strong performances. E-commerce revenue stood at 133.5.
Sir, sorry to interrupt. Sir, sorry to interrupt. Your voice is breaking.
Am I audible now?
Sir, you are audible. Can you come again, please? Sir, please hold on. Let me reconnect you to the line. Ladies and gentlemen, please continue to hold on. We are reconnecting to the management line. The line for management has been reconnected. Please go ahead, sir.
Yeah, apologies for technical error, but now I'm hopeful that you people are able to hear us clearly.
Yes,
so e-commerce revenue stood at 143.5 crore, registering 113% year-over-year growth, while franchise revenue rose to 340.8 crore, reflecting 105% increase year-over-year. On the customer front, engagement continues to strengthen. A transaction volume were up by 18% with an average transaction value of rupees almost 1 lakh. Footfall grew by 20%, supported by a conversion rate of 93%, demonstrating a sustained consumer interest even with the rise in the gold prices. Festive sales played a major role in driving growth, highlighted by record sales of 428.1 crore on Navratri, marking a 66% increase over last year, underscoring strong festive momentum. We also saw a significant increase in the studded jewelry mix, taking the stud ratio to 9%, reflecting a clear shift in the consumer preference toward more design-led aspirational products. At store level for H126, our per store revenue stood at 61.8 crore and net profit at 2.4 crore per store. During the quarter, we further strengthened our retail presence in Maharashtra with the launch of our flagship store in Dadar, Mumbai, a key milestone that strengthened our brand visibility in one of India's most prominent jewelry market. Our flagship event, Mangal Sutra Mahotsav and Penjan Mahotsav, received a record customer participation and contributed meaningfully to the top line growth. Looking ahead, we are optimistic about sustaining this growth momentum while the upcoming wedding season expected to drive strong consumer demand. CRISIL has reaffirmed our long-term rating at CRISIL A positive and our short-term rating at CRISIL A1, underscoring our strong financial discipline and prudent capital management. In summary, Q2 financial year 26 marks another quarter of robust and broad-based performance with strong early festive momentum, healthy margins, and expanding geographic reach, reaffirming our position as one of India's most trusted jewelry brands. That concludes the financial highlights for the quarter. We can now open the floor for questions. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Raj from Finvestors. Please go ahead.
Congratulations on very good set of numbers, sir. My question is, sir, now how is the adoption of gold jewelry as we have seen such a spike in gold prices in last 1 year? So when do you expect to come to those kind of volume growth in the business?
Raj, thank you for your question. And this has been spoken for quite some time now, the impact on high prices on consumer demand. And we have seen that in spite of these high prices, demand remains buoyant. Diwali, the entire festive season has been a record-breaking season. Value growth has been enormous, as you've seen from our numbers. But we have also seen positive volume growth at the company level. The consumer interest in jewelry remains strong. And now with the upcoming wedding season, in the month of December, Jan, the road looks pretty positive. All in all, the rising prices had no impact on consumer demand. Both investment demand and jewelry demand have been strong as we speak.
And just want a clarification from your side that when we compare this result with last year's results, so there is a revenue from the refinery. So till when it will come in the results, and I think...
So if you read the financials clearly, the revenue from refinery was up to 30th September 2024. So as after that, there has been no refinery the operation revenue accounted for. So for this, when you compare the H1 versus last H1, there has been no refinery business. But just to put your thing on quarter-over-quarter basis, as quarter ended September 30th, 2024, the refinery business was around 350 crores, which now is zero in this quarter.
And what could be the PAT or EBITDA effect by excluding this business?
Sorry?
What could be the PAT or EBITDA effect after excluding this business from our right now main business?
Yeah, so I think PAT, what we have posted currently for financial year 26 quarter 2 is 3.6%. And that is, without considering the refinery sale. So that you will see in coming few quarters as well, that we will definitely try to maintain our PAT levels with the same margin.
So from next quarter onward, this refinery business will not be accounted for.
Correct. So this is last quarter. This is the last quarter wherein you are able to see the comparison of refinery sale as compared to last year H1. Now onwards, there is completely apple-to-apple comparison. There is no refinery sale you will see from quarter 3 onward from last year as well as this year.
Oh, fine, sir. Fine clarification, sir. And so, sir, on EBITDA margin percentage, so our larger peer, I see they having substantial EBITDA margin. So we have doing EBITDA margin of, I think, 6.5% or slightly above. So what is your take on EBITDA margin and what lesser we are doing or how better they are doing, how far we are from them?
Yeah, so EBITDA margin also consists of retail and non-retail. In case of retail, our EBITDA margin is almost 9% plus, and at company level, our EBITDA margin, we are improving on quarter basis. So this improvement you will see in coming quarters in the same pace. We are hopeful that we will continue the same margin level for next balance portion of the financial year as well.
Okay. So thank you very much, sir. And after all, even having the spike in the gold prices, these numbers are very good, excluding the Chinese number. And I hope the same momentum will continue for the rest of the year. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Mr. Ronit from Fin Avenue. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Good evening, sir. Very congratulations on your great result. My question is, can you share the number of active customers you have in your schemes such as this Future Plan, Bajikata Promise Plan, Golden Gain and Swama Lakshmi Labh Plan?
So we'll share the entire detailed list with you. I don't think we have the list right now, but in value terms, we can share you the total amount collected in value under these various schemes which are spoken about. Because these finally all lead to purchase, they all convert into jewelry purchases at the end of the expiry. In
Okay.
terms of the value in these schemes,
So I'll explain. So as on September current financial year, we have a golden gain plan of almost 53 kgs and Suvarna Labh Lakshmi plan is almost for 63 kg. So totaling 115 kg, which is completely hedged on the MCX. So there is no risk in terms of whatever plan we are currently running in our company.
Okay. And what percentage of sales that would contribute to?
Yeah, so definitely, these things are, since both the schemes we have launched this financial year, so definitely.
So total contribution would be around 10% from this scheme because there are schemes in quantity and schemes in value. So the total sale from this would be in a tune of around 700 crores, which would be on the range of around 7 to 8% of the annualized sale.
Okay. And sir, one more question. What would be your guideline for the coming 2 to 3 years?
So the guideline which I mentioned in terms of store expansion, we already said this in the last call also that we are looking at targeting around 78 to 80 stores by March 26. And then we'll be adding another 33, 35 stores in the next 2 years. So by end of March 28, the company aims to reach 150 stores, which will be a mix of franchisee, company-owned stores, and both the PNG traditional stores and lightweight jewelry PNG lifestyle stores. So that is what we have been. The guidance has been, and we are on track for that. As we mentioned, we should be reaching around 78 to 80 stores by end of March 2026.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Mr. Nitin Jain from Fair Value. Please go ahead.
Hello.
Yes, sir.
Hello.
Yeah, Nitin, go ahead.
Can you hear me?
Yes, sir, we can hear you.
Yeah, thank you. Thank you for the opportunity and congratulations on a great quarter. My only question is the stores that we have opened outside of Maharashtra. So post their festive season, what kind of traction are we seeing in the stores? Thank you.
So we have launched 3 stores outside Maharashtra and Goa. 1 has been in Indore and 2 have been in Uttar Pradesh, Kanpur and Lucknow. All the 3 stores started on a very positive note with the festive season around the corner. And post that, they are doing performance in tune with the overall market. So as per the target which we had set for the stores are on track. And both in terms of footfalls and conversion, the stores are on track to be able to achieve numbers which we had projected.
Right. And also in terms of break-even, they are following the trajectory of the Maharashtra stores.
So we had said that we'll be needing another 3 months more for state stores to outside Maharashtra. So we had said 15 to 18 months for stores in Maharashtra and 18 to 24 months for stores outside Maharashtra. So, we don't see any deviation there. The stores are on track. The response has been positive because for us, the main criteria is the footfalls in these new stores in the geography outside Maharashtra, and the footfall have been strong. So that's a strong indication that, we should be able to guide and achieve what we have been, seeing in our past calls also.
Sure. That's very helpful. Thank you.
Thank you. The next question is from the line of Mr. Dinesh Kulkarni from FinSight. Please go ahead.
Hello, sir. Am I audible?
Yes, sir. Please go ahead.
Okay. Thank you very much. And really great set of numbers. Sir, my question is, okay, I know we are adding quite a few stores in Maharashtra and around nearby states. But do you think have we captured the whole of Maharashtra yet, or like what's the plan for the next 3-4 years? Okay, like are we fully penetrated in Maharashtra and then it's good to go for states outside this region. Like how good we are in Maharashtra itself, sir. If you could explain something on that.
Yeah, thank you. So see, we have always mentioned that Maharashtra is a fast growing state and newer pockets are always coming up. So in spite of our expansion outside Maharashtra, we always have an eye on Maharashtra. That being said, even in our existing for next 2 years growth, we have always targeted 10-15% of the stores to be in Maharashtra. So that means around 3 to 4 stores could be in the state of Maharashtra, and the rest could be outside Maharashtra. Because like you rightly said, Maharashtra is a vast state, and newer pockets are always coming up. So there's going to be always an eye on that. But right now, we are well covered in Maharashtra. As far as PNG is concerned, as far as lifestyle by PNG is concerned, there is a lot of opportunity there because there are a lot of new markets where we have not launched lifestyle. So on lifestyle, we could see further, store launches in Maharashtra. For PNG, we see primarily we'll be looking at the neighboring states, the Central India region, as we have spoken. But the objective will always be that, starting stores where we feel the market is there and where the market is currently underserviced and there is potential for us to enter that market. So our market research and our sales team are always on the lookout for such new areas.
Okay. Sir, like as you discussed previously, like say if the gold prices remain so high, which we know, say above 1 lakh rupees, do you think the kind of volumes I know the festive season definitely boosts and helps the wedding season and festive season, but so like over a period of time, if the prices remain so high, have we done some kind of a sensitivity analysis? Like, okay, like say assume the prices remain so high for the next 3-4 years, assuming the uncertainty around the global financial markets. Do you think the volumes will still hold, or do you think there will be a decline in the volumes?
See, the entire profitability of the industry is based on value, because your making charges are a percentage of the value of the entire the gold cost. So as long as you are being able to grow in terms of absolute value, your income is going to keep on growing, and that is what we have seen also happening in this space. But just to add to your thing of gold prices going higher, in India gold is not just jewelry or fashion; it's also emotion, it's a religion, it's a part of a tradition. So people are using old gold as a currency to buy new gold. So today almost 50-60% of the entire jewelry purchases, wedding shopping is happening to old gold. So that is ensuring that the volumes are also intact and the margins from the making charges are on the positive side. So I think we don't see any pressure in terms of these prices. People always look at gold as an appreciating asset, and it's not just an investment; it's an emotion. So I think from that perspective, the numbers should not see a concern even if prices go up.
Okay, sir. Thanks for those answers. So just 2 quick suggestions which I have, because I'm a customer as well of the stores. I recently visited quite a few stores in here, Pune, in Chinchwad area. One thing is, sir, when I'm searching Gadgil jewelers, right, by default even Google still returns PNG Sons. I know it's a kind of a competitor today with us.
But working on that, Google works on certain algorithms, and that's what we're working on. Google also works on the longevity. So that's the thing which we're already working on. This also has been said by some other customers. So duly noted, we're working on this. Yeah,
and one more thing, sir. Like I'm also using the app as well, pngadgil app, and it's really not user friendly yet, because even though I'm having a user account, it's not allowing me to enter my details and log me in. Since there is some work needs to be done on that front as well. It is just a suggestion, from an investor customer. So please take. But the app today has been used by a lot of customers for making their payments and for browsing. But definitely we'll see if there is a bug, and we will work on that. Yeah, it should be work. Thank you very much, sir. All the best.
Thank you. The next question is from the line of Mr. Naveen from Motilal Oswal Financial Services Limited. Please go ahead.
Yeah, Saurabh. Saurabh, if you can just give us some more sense about how has been the festive kind of trend. So October, if you can share about how has been the triple SSG was there. And also, since we are kind of a middle of the November, have you seen any kind of a deceleration in November?
So, I mean, October had been a bumper month, and like we are also given a release to the exchange that, we had the highest Diwali sales ever. Also, the entire month has seen record-breaking sales. We have crossed 1,800 crore plus in a single month. Another highlight has been the strong support from the studded category, which has shown a very high increase, and the reinforcement of people's faith in gold as investment and as jewelry both has been reinforced again during this time. In terms of post Diwali, there's always a little slowdown in the month of November, which we have seen. But markets, as prices are going up, markets have picked up. And even this month, the guidance for the quarter, I think we should be able to achieve that is what we feel right now, looking at the overall market sentiment. Silver has been doing exceptionally well. Has seen very, very good traction. So all the cylinders are firing, and I think that there shouldn't be any deviation from what we are projecting for the upcoming quarter and for the upcoming H2.
So fair point. And with respect to our store opening guidance, are we revising any guidance, and how are you placing second half with respect to store expansion in Maharashtra and new states?
So we stick to the same guidance. We had mentioned that we'll be touching around 78 to 80 stores as of March end 2026, which will include a combination of PNG and Lifestyle and Coco and Foco. So we stick to the same guidance. I think both in terms of the expansion, in terms of the numbers, I don't think there is any deviation from what we have been speaking. So I think as of now, as we speak, the guidance remains the same.
So our entry in MP and UP has been kind of targeted the top cities in those states. One, we should look for similar cities, more stores. You think that the top 5 cities of these states you will kind of look out for store expansion for this year and the next year sort of a time frame?
So, I mean, both these states, the 3 states, primarily MP, UP, and now adding Bihar to it, we are looking at adding more cities. So, as we speak in MP, we're looking at Bhopal, we're looking at Jabalpur, we're looking at Gwalior, Banaras, we're looking at this one, Prayagraj, and a couple of more cities. So, there's expansion in different cities and also looking at more markets in the existing city. So, dedicatedly, we are doing market research, we're doing exhibitions in those places, getting a lot of inputs, market intelligence. But the plan would be to focus on states, and like we have spoken before, it will be a regional focus ploy, look at a particular region and be a player of dominance in that region. So, we continue to stick to the same model. And the region where we have mentioned, the Central India belt, starting from MP, UP, Bihar, Chhattisgarh, Jharkhand up to Orissa and Delhi NCR is what will be in the focus for the next 2.5 years.
Sure, Saurabh, sure. And when I look at the other expenses side, certainly there is a kind of a big jump versus YOY, and even sequentially there is a big jump versus quarter one. Is it to do with new stores expansion where we had kind of a money on the new states, both Indore and Lucknow side? And how should we look at the run rate in the coming quarters?
Yeah. So hi Naveen, Kiran this side. So other expenses, you are right. They are because of basically the advertisement cost that the media and all these things that we have already anticipated in the beginning, that when we are going ahead with the expansion, then this cost is definitely going to be on a higher side. So I think predominantly these are the costs.
So how should we should look at this number either as an absolute number for the second half or any percentage of sales? How should we look at this number to?
So what we are thinking is that it should not cross 1.25 to 1.50 of the 1.5% of the total revenue, the entire marketing spend.
Okay, so that you're saying only for the marketing. I'm talking about the total other expenses, which this quarter is close to 5.1% of revenue. And if I look at the first half also, it's close to 4.95% sort of a number. So should we assume that this number will run as a percentage will maintain for the year, or you think that a lot of expenses were on front end and maybe the second half we may not see such kind of high expenses side?
No, Naveen, the thing is, whatever expenses we have booked for particular September up to September, there may be slightly incremental expenses because, this H1 we have opened almost 11 stores and we have a plan to open remaining 14 stores or probably additional 16 stores by H2. So you will see slightly incremental in the marketing spend.
But Naveen, overall, like Kiran mentioned, the 1.2% of the total top line is what the marketing will be capped at. So there will not be any huge incremental hike in marketing also for the entire year.
Sure. And my next question is on the gross margin side. So quarter one, we were close to 13% margin, and we are guiding that maybe this is a number which is kind of sustainable for coming quarters also. From that lens point of view, it is like 12% margin this quarter. Even on a YOY basis, it is on a higher side. But when I look at the quarter one, it is slightly on a lower side. So how should we look at one second half number? And maybe on a medium term, how to look at this gross margin trend?
See, as compared to quarter one versus quarter two, Naveen, this quarter two there is no major festival as such. So we have opened the new store. So more or less, our intention is to do the replenishment. We have to ensure that our stock level should be maintained at the same level. Now the real improvement you will see in quarter three. In quarter one also you will see there is only one festival, Akshaya Tritiya. So Gudi Padwa also shifted to last year. So, we are expecting that quarter three you will see as compared to quarter two, high margin improvement in the gross margin.
Sure. So broadly, at a EBITDA level, close to 5.5 to 6% can we expect as a EBITDA margin for the year?
Yeah, of course. At a company level, definitely.
Sure. And anything on the other income side, like with this quarter, we have seen big jump in the other income side?
Yeah, so other income, as I told you, it is basically our fixed deposit, which we have, done for the GML proper. So that FD interest that has been, captured. At the same time, there are, gain on the derivative instrument. That is also we have to book because, that discount we have captured at the other expense, but the gain we have to, account for in the other income. So that is the reason that has been shooted up.
So part of the other income will be sustainable?
Yeah, of course.
And then how much we should kind of
Naveen, the thing is, my total fixed deposit with the bank is roughly 750 crores. So on that, I am, having my fixed deposit at 7.5%. So that you will see on a continuous basis. Only thing is, we have to account for as and when on a quarter-on-quarter basis.
Okay, so broadly, you're saying around 50 crore other income will be there from fixed deposit side. Is that understanding right?
Correct.
For the whole year.
Yeah. For the whole year.
Yeah.
There can be lumpy on a quarterly basis, but at an annual level can be 55 crore sort of a number.
That's right.
Sure, that's all from my line. I will be in the queue again.
Thank you. The next question is from the line of Mr. Aditya Agarwal from Fin Avenue. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah, good afternoon.
Sir,
Go ahead.
Sir, I just wanted to know our guidance towards stud ratio. Like as of now, we are having a stud ratio near to 9 or 10%, whereas leading players such as Titan and Kalyan are having a stud margin ratio of near around 20 to 25%. So do we have any plans to increase stud ratio from here on in next 2 to 3 years? And if yes, can you please guide on the same?
Yeah, definitely stud ratio has been an increase, as we have spoken before also, that we started with 5 years ago with almost a zero stud ratio, which today is around 10% on a grown volume. The company aims to reach 12-13% in the next 2 years, and that has always been the focus. We have recently also launched Polki and Kundan jewelry, which is another addition to the stud category. Colorstone jewelry also is doing well. So we are confident that the stud ratio will keep on growing. And if you have seen even the financials, the margin increase has primarily come from the higher sales of diamond and studded jewelry. So that's the area which we continue to focus on.
Yes, sir. And sir, like our inventory, can we guide on the hedging policy of our company on the inventory side?
Yeah, so we are doing 100% effective hedging on month-on-month basis. So that's the same thing we are keeping continue for last almost 9 months after the IPO.
And sir, so whenever gold is sold from our stores, so hedging losses we book in that current quarter only in the P&L statement?
Yes.
Okay. So thank you so much.
Thank you. The next question is from the line of Mr. Rajiv from Novama. Please go ahead. Mr. Rajiv, are you on the line?
Yeah. Good afternoon, sir. Thanks for the opportunity. So on the hedging part, are we completely hedged on silver side as well?
Yeah. So silver side, during the festive season only, we are keeping our position hedged. Otherwise, we are using the replenishment model for silver.
Okay. And I mean, you made a comment that in other income there is a gain on FX. Ideally, there should be a loss because of the hedging part, right?
No. The thing is, we have launched the scheme in the month of September that you can book the metal by paying 50%, and at the time of festive day, you can buy the product at the lower price or the market price, whichever is lower. So exclusively for that purpose, we have taken the forward cover.
Okay. Got it.
So only for that purpose we are having the gain, because ultimately whenever you are launching any scheme, you have received the advance and that is fixed order. So I have to hedge it.
Sure. And if you can call out what is the SSG on a YOY basis, and it's a request if you can publish that number also in the presentation.
Yeah. So year over year, if you see then the SSG in terms of volume is more or less same, but quarter over quarter there is 29% growth in the SSG. Why I am saying year over year there is no improvement in the volume, but yes, value wise there is slightly growth. The main reason for that is the number of stores. For H1 we have 39 stores last year, and this year H1 we have almost 63 stores. So 24 new stores have been added to the kitty. So now, as we mentioned in the IPO, so that we require minimum 15 to 18 months if the store is in Maharashtra to reach to break even, and then slowly this store will definitely improve in the adding to the bottom line. So you will see eventually in the coming quarter the improvement in the SSG for the store which we open after IPO.
The question was the stores which you had at the end of Q2 FY25, which is let's say 28 Coco stores. How did they do on a YOY basis? And let's say removing the addition which you had over the last 12 months.
So as I told you that as we publish the data quarter over quarter, there is a growth of 29% in terms of value.
Okay. And yeah, got that. And also on the working capital side, the payable number, which in every quarter basically swells up. How do we think about that in the subsequent months?
Hello, you are not audible, Rajiv.
Can you repeat the question, please?
Yeah, so I'm talking on the working capital side. So the payable number is it? I think it's close to it's again elevated in this quarter, right? Which we usually in the March and again drops. So how should we think about that? Because your working capital requirement from the payables, I mean, would have been higher if not for the payable gains which you had during the first half.
Yeah, so your question is very valid, Rajiv. The thing is, since we are closing on 30th September and we have to gear up for, since Dasra is on 2nd of October and plus the festival season also in the month of October. So yes, there is slightly improvement in the payables on 30th September, but because after the festival, whatever the credit days we have already cleared entire payment cycle.
Okay, just one clarification. So I remember at the time of the IPO, typical store required, I think 52 crores in terms of investment. Considering that the gold price has seen the kind of rise, what is the, let's say, capital employed per store you're looking for now for incremental, let's say, 3,000 square feet store?
Yeah, so now last year when we have done the presentation, that time we have anticipated that 33 to 34 crore of the investment with the store size of 3,500 to 4,000 square feet. Now that because of the incremental in the gold prices, that minimum investment is around 45 crore and the capex is roughly 2 crore. So around in between 47 to 50 crore is the amount that need to be infused for opening of new store.
Got it. That's all from my side. Thanks a lot for all this.
Thank you. The next question is from the line of Mr. Utkarsh from BOB Capital Markets Limited. Please go ahead.
Yeah. Hi, good afternoon, sir. Sir, I just need a clarification on 2 points. First, on the store opening guidance front, so you have mentioned that we are looking forward to open 78 to 80 stores by March 26. So just wanted to know how many PNG traditional stores we are looking to open in the second half of FY26, and how many it would be COCO and franchisee store in the second half.
So see, as we opened one store on 1st October. So as we speak, we are at 64. We plan to add another 14 to 16 stores by in the coming 6 months before March end. Out of that, we have targeted that we should be looking at around 6 to 7 PNG stores, and around 7 to 8 lifestyle stores. So you can say 50-50. And again, out of this, 50% will be company and 50% should be franchisee.
Okay. So like, if my understanding is correct, we were having 59 PNG traditional stores at the end of September. We have opened one store in October, so our total store count has gone up to 60, and we are looking forward to open another 7 stores, say in the remaining 5 months of FY26.
Yeah, 7 to, see, franchisee may increase around 7 to 8 stores you can say for PNG.
Okay, fine, sir. And sir, second clarification, I just wanted, what is our revenue growth and margin guidance for the second half of FY26, and how much revenue growth we have clocked for October month?
Yeah, so Utkarsh, this is a good question because, the H1, which is, we haven't seen any major festival, only Akshay Tritiya, that is also super duper. But now, this quarter, which is quarter 3, we have completed the month of October, which is Diwali as well as, Dussehra. And this entire month, October itself, we have completed the turnover of the entire quarter 1. So now we are very much positive that, after the remaining 2 months complete, we can definitely reach around in between 3,000 to 4,000 crore for the quarter. And with respect to the margin, definitely you will see a great amount of improvement in the margin as compared to quarter 2.
Okay, and sir, how much revenue growth we have seen in October month, sir, if you can specify?
So see, October figures are not audited, but October the revenue would have been in the upwards of 1,800 crores.
Okay, thanks a lot, sir.
Thank you. The next question is from the line of Mr. Nitin from Fair Value. Please go ahead.
Yeah, thank you for the follow-up opportunity. So my question is on the lifestyle format. If you can provide some more color on the break-even period required in this format and what kind of margins do we get here?
So see, lifestyle is by name itself is a lightweight jewelry focused format. So the store size would be ranging in the around 1,500 to max 2,000 square feet. This could be on a high street or in a mall, catering to the working woman, fashion conscious, lightweight oriented customers. The inventory in these stores would be in the range of around 8 to 10 crores. And we expect that these stores should contribute once they mature to around 2.5 to 3 stock turns. So around 25 crores is what we expect these stores to reach at. The margins would range, in the range of around 20-25%. So while the gross margin at PNG or traditional store would be around 13%, the lifestyle would be in the range of around 20-25%. Kiran, you want to add anything more on this?
Yeah, I think what Saurabh has mentioned is correct. So roughly a typical investment of 10 to 12 crore with the gross margin of around 20%. And with this, typically we say that 1 year or 1.5, that 15 or 16 months, that particular store will come to a break even. And that is, we are feeling that it's very healthy margins we observe because last entire 12 months we opened the 3 lifestyle stores. So they are doing predominantly good and they are already reached to their break even and one store already crossed the break even. So we are seeing good traction in the lifestyle as well.
That is very helpful. Thank you. And my last question is on international expansion. So a lot of your peers are reporting good growth in Middle East as well as North America, specifically US. So do we also have any international expansion plans on the card?
Yes, so we have mentioned during our plan for the year that we will be looking at adding a store in North America. Somewhere on the West Coast is what we are targeting right now, California, Seattle, where we already have a presence. So that is all on the cards right now, because we see a lot of more opportunity right now in the Indian market. So the company is focusing aggressively on the Indian growth. But yes, we'll be adding. We look at adding one store a year on the international front. Right now, looking at North America as a region.
Right. Thank you, and all the best.
Thank you.
The next question is from the line of Mr. Lakshmi Narayanan from Tunga Investments. Please go ahead.
Yeah, thank you. Just want to understand, you have been phenomenally successful in Maharashtra. As you actually expand into other geographies, which could be contiguous or even outside Maharashtra, like UP, etc. What are the activations? What are the things you do to actually attract footfalls? Because you mentioned that the footfalls have been good. So, want to understand what are you doing, which makes you a trusted name in those states also.
So it's a very important question, and that's something which is always on the mind of the company when we expand. So it's a series of things we do before we enter into market. We do market survey there, then we do exhibitions there. We do a lot of groundwork there in terms of creating relations, creating friends of brands. Once we are confident about launching a store, we do a lot of activities around there to spread awareness. We do branding campaigns. We do a lot of physical campaigns in terms of newspaper hoarding. Do a lot of online activities. Even when you are on the drive to recruit staff, we also try to get people from the relevant background, which also helps us to get a better understanding of customers. And having the right product at the store, the right merchandise, really helps us to be relevant to the people's requirements there. And I think the legacy we carry, the brand positioning we carry, that really is a very important pull factor when we go into those markets. So as you saw both in MP and in UP, people come to us because they see we are a legacy brand, having deep understanding of the jewelry market, known for its values and trust. So this combination of all these things leads us to being able to generate that kind of footfall. And it's a very, very planned approach. We also try to estimate the footfall per day, footfall per month, and then we try to compare that with what is actual. On that basis, we have said that we are kind of on track to be able to achieve what we had forecasted for these two regions.
So typically, when I look at some of the other geographies, one of the pulling reasons could be some kind of a discount or some kind of reduced making charges, etc. Now, is that something which you actually look at it in those markets where you are? Of course, there are other large, maybe national chains, also regional chains are around. Do you actually reduce your making charges in those regions? Is that a way you actually look at it?
See, making charges are never a factor which converts purchases. A customer may get 5 rupees off, but he has to still pay 95 rupees. So, the brand, the design, and the service are the key elements, and that is what we believe in. Our discount can just be for a festive season or for an inaugural offer. Just to more of a respect for the customers and as an entry in the market. By the company, we always focus on the values more than the discount.
Sorry. And any thoughts on this lab-grown diamond? That is also in one side we hear a lot of noise around that. Does that anyway impact your sales of studded jewelry?
The studded jewelry sale has seen a very, very steady rise. There's been no pressure from lab grown. So as a company, we have not seen any pressure from the consumer side demanding lab grown. So as of now, there is no interest from the company to venture into that category.
So one last thing, organizationally, we have been focused on Maharashtra. Now that we are actually expanding others, what changes at an organization level you have done in terms of management bandwidth so that the right steps are taken, and then in terms of if there is something going wrong, you can pull back. How are you risk mitigating these expansion
We are
plans?
doing a lot of things on that front, setting up a store operations audit team, looking at increasing the merchandising team, looking at increasing the further, development, business development and exhibitions team to being able to have a better control over your CRM and to get feedback from that, visit by our experienced senior professionals in those regions. A lot of these things are done, and I think that it's very important to be able to not just grow, but to be able to grow profitably and manage that growth.
So one last question from my side. In your total tonnage of sales in gold, how much is actually traded in? Essentially, people are coming to recycle, and then how much is coming from those campaigns? You talked about some schemes which is around like some X number of kilos of gold. You
on the
said,
jewelry side, on the jewelry side, around 50% would be old gold, which is exchanged against new jewelry. The schemes, as you mentioned, around 8 to 10% of the entire volume comes from the scheme sales.
And this 50 kgs of gold thing, is it? I mean, all of them coming from your own sales, or how much is coming from other places purchased gold?
So we do, as a company, we are very compliant on buying old gold. So without an invoice, we do not purchase old gold. So most of this is our own gold. But yes, definitely, if it's hallmark gold from from the market with a proper invoice, we also already accepted. But we have seen that 80% of our is still our own gold.
And the customers who are actually doing this, trade-in as well as these, though it is 60%, they may be also adding. I mean, they may be the same people who are actually buying more gold, right? So if you look at it purely for fresh gold purchases would be how much?
So see, that is what we always said before, that old gold is 50%, the balance is fresh purchases. And because being a legacy brand, almost 70% of our customers are already people who are a part of the PNG family. So the cost of acquiring new customers for us is very low because we are able to have a huge database of our existing customers.
Yeah. Thank you so much, sir. This is very helpful.
Thank you. The next question is from the line of Mr. Ronit from Fin Avenue. Please go ahead.
Hello.
Yeah, Ronit.
Am I audible?
Yeah, you're audible. Go ahead.
Sir, how much revenue is from gold, silver, and sale of diamond? Could you bifurcate on that, please?
Sure.
So roughly,
like you did 2,128 crore of revenue this quarter.
Yeah. So you want a quarter-wise quarter or how you want?
For this quarter, what's the bifurcation? How much is from gold? How much is from silver, sale of silver, and how much is from sale of diamond?
Yeah. So when I see my total 100% revenue, it almost 85% is coming from gold and 10% is coming from silver and remaining 5% is coming from diamonds.
Okay. For diamond, we only mean the stone cost. The metal cost is included in the gold ratio. That's why when we say that we are around 10% studded, the 5% also is the gold component in that.
Okay. Got it.
So you can, so that is what the breakup is.
Okay. And one more question, sir, I have. What's your update on the previous 2 stores, the lifestyle store you have opened?
So both like Kiran mentioned before, we have total launched 3 lifestyle stores. Of that, one are already breaking even, 2 are on the path for it, and the same what we're expecting in terms of being able to do 2 stock turns. We are on track for that. So the response is encouraging. We have also had to do a little work on the merchandising mix. So that is what we have right now worked on. And looking at the way the brand is accepted by people, we are confident that the expansion ahead would definitely be fruitful and we'll be able to add to the PNG existing stores.
Okay. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you, everyone. We truly appreciate all the participants for taking our time to join the conference and for insightful questions. We hope we'll be able to address all of them to a satisfaction. If you have any further queries or would like to know more about the company, please feel free to reach out to our secretarial team and investor relations partner at X4B Advisory. Wishing all of you a great day ahead. Thank you very much.
Thank you, sir. On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.